Ladies and gentlemen, good afternoon. Let me begin this afternoon by thanking you all for coming and for honoring the invitation for this presentation. But before I do, let me acknowledge the presence of our honorable members of parliament, Honorable Mutoli, the chair of the budget committee, Professor Chakravarti, my good prof, a member of the MPC. In the same breath, my brother Persistence Kwanyanya, not forgetting, of course, members of our board that are key to the work that we do, especially the chair of our Human Resources Committee, Mr. Manikai, but of course my sister here, Belinda Mswaka, and of course, Ms. Mapisa, welcome our board member during this period. I would also like to welcome our members of the press, not forgetting, of course, senior members of the bank seated at the back. Let me just say that you are all very welcome, particularly financial services players here present. The president of BAZ and other distinguished leaders of associations around the economy. I want to say, after an exhaustive and exhausting, I should say, consultation process, this afternoon the governor has invited us all to his presentation of this year's monetary policy statement, which is statutorily mandated. This statement comes at a good time for our country, as we are receiving very good rains. And like it or not, the economic outlook looks really bright. Believe you me, the vantage point from the vantage point of the Reserve Bank of Zimbabwe, these consultations and the input thereof have been carefully distilled, and looking at the different demands of the economy with the view of taking this economy forward, this policy statement has been summarized in this afternoon's presentation. So, ladies and gentlemen, without much further ado, let me invite the governor, Dr. John Shaba.
David Governor, and good afternoon, everyone. And may I say, all protocol observed. I think, as the Deputy Governor said, this monetary policy statement is a result of extensive consultations. We spoke to everyone who came to speak to us, so that we would gain an understanding of what it is that we need to do and what it is that we need to stop doing. So, arising from those consultations, we then came up with the measures that I'm going to be announcing today. I think we will start by just giving you some basic numbers that we have not given you today, pertaining to how much money is in circulation and so on. And I think if you look on the screen, what we are saying there is that since the introduction of ZIG in April, we have seen inflation being very steady. You know, we started on almost negative inflation, then we had that spike in September, when in October, when we had 37.2% inflation, but it has since been coming down. Of course, there was the shock in January of 10.5%, but surprise, surprise, is actually below the USD inflation rate when we are looking at the zinc inflation rate. And we are informed that the January inflation figure is a result of rent increases and also prices increases effected arising from the blitz that was taking place in Beitbridge. As far as reserve money is concerned, which is the fourth line, you will see that we have maintained reserve money at below 4 billion ZiG. Here we are just giving you ZiG figures because those are the ones that determine the monetary policy. We have no control over the US dollar, so we are just focusing on ZiG. So we have maintained reserve money at below 4 billion ZiG. And the next line is actually talking about ZiG deposits in the market. Currently, we are sitting on 12.4 billion, roughly, let's just say 12 billion ZiG in the market. And out of that 12 billion ZiG, you will find that the reserves that we hold in the central bank in the form of gold, foreign currency, and other minerals converted to ZiG come up to 14.4 billion ZiG. Now, if you do your simple maths, you divide 14 billion ZiG by the 12 billion, which is the total of deposits, you will get a figure of 22. In other words, what that is telling you is that if we were to buy back all the ZiG that's in the market, using the reserves that we have got, we should be able to do that at an exchange rate of 22. Now the question is, if that is the case, so why is the willing seller, willing buyer at 26? And why is the parallel market at 33, so we are told? So those are some of those questions that we need to answer. But from where we sit, it could be a result of historical issues where people are of the opinion that ZiG should continue depreciating, and that is what is in the mindset, in their mindset. Or it could be due to lack of confidence in the currency, which are the things that we are seeking to address. If you look at the ratio of non-performing loans, it's at 3.37%. Our benchmark is it should not go beyond 5%. Now, I've heard in various fora people saying NPLs are shooting through the roof. And I'm saying, where are they getting these figures from? Because these are the official figures that we've got there. It has never gone anywhere near the 5% that we see as the international benchmark. Then, if you look at the market position, again, there is this story that's doing the rounds that we have a liquidity crunch in this economy. You will see from those figures that the market has been long, plus or minus 1 billion ZiG, every day since September last year. So why is it that we have this so-called liquidity crunch? The answer is very simple. Out of the banks that we have, liquidity may be concentrated in some banks, and I have told bankers here, time in and time again, to say you should trade amongst yourselves. You find that a bank that is long is not happy to lend money to a bank that is short, and they would rather have their money taken by the central bank in the form of NNCDs, and we pay 0 interest for those NNCDs. The question is, why are they not lending to the bank next door? But again, we need to address these structural issues in our banking sector. Of the reserves that I talked about earlier on, we have 186 million US dollars as deposits in our account at Federace in New York. And then we have 2.6 tons of gold in the vaults. And also, we also have, and those 2.6 tons are worth about 241 million. Then we have other precious minerals worth about 122 million US dollars. Again, people were saying It's not true. There is no 2.6 tons of gold in the vaults. We commissioned an audit. This is an audit report from BDO Zimbabwe, which is confirming, and I can read, because you don't trust us, so sometimes we then have to go the extra mile to get a third party to endorse what is factually there. This is an independent report, audit report addressed to the Minister of Finance, Economic Development and Investment Promotion, and it's on BDO letterhead. It says, we have audited the gold balance of the Reserve Bank of Zimbabwe, the bank, as at 31 December 2024. As at that date, the bank held 85,843.38 ounces, that is 2.67 tons of gold, valued at US $223,784,913.34, or ZiG $5,773,315,086 ZiG and 82 at international market prices. In our opinion, the gold balance is fairly stated in all material respects in accordance with the Reserve Bank of Zimbabwe Act, Chapter 22.15, and its accounting policies, which use IFRS as a guide. So let's hear you say again, there is no gold in the central bank. And this is unencumbered gold in the central bank. So I talked about there's also the issue of foreign exchange availability at the central bank. When we came up with the monetary policy statement in April last year, we said that the central bank would meet any foreign currency shortfall. And if anyone has got an invoice that has not been paid, they should go to their bank and it will be honored. We have been monitoring what we call the daily pipeline of unpaid import or foreign payment invoices. As of the end of January, they were sitting at 17 million US dollars against the reserves that we have, that you have seen there. And are you saying the central bank has got no capacity to honor those invoices when we've got those reserves? But having said that, we have been going into the market every week to intervene. Yesterday, we went in with 10 million US dollars. Only 5 million US dollars was taken by the banks, which means probably some of the invoices were duplicated. Again, we then hear of the existence of a parallel market. And we are saying, if your business is legit, why would you go and buy foreign currency from the parallel market at 33 when there is foreign currency from the central bank at, I think yesterday, as a willing seller, we went in at 27. And the banks were saying it's too expensive. Again, but you are happy to buy at 33. You don't want to buy at 27. Unless whatever transactions you are doing in the parallel market are illegal, maybe that is the reason why you would go there. So I just wanted to assure you that there is enough forex in this market to meet all the import demands or any foreign payments that any person might have. And I talked of the implied exchange rate of 22. Now, I will not go through the economic environment to say what is it, what is the inflation rate, and so forth. I think you will take it as read in the document that we are going to give you. But before I come up with the measures, I want to say that the monetary policy statement that we are going to present is a result of our strategic plan for the years 2025 to 2029. And in that strategic plan, we are saying, let's go back to basics. Let's do only what a central bank is supposed to do. I did tell you in my maiden monetary policy statement that it is not my job to do other people's jobs. We are going to do only that which is expected of the Reserve Bank in the Banking Act, in the Reserve Bank Act. And that is, first pillar, consolidating price, currency, and exchange rate stability. That's our role. Making sure that our currency is stable, making sure that inflation is under control. Then, enhancing monetary stability, research policy, and data integrity. Again, that's our role. And then, lastly, maintaining safety, soundness, and resilience of the financial sector to make sure that banks do that which they are supposed to be doing. And there is a lot of undoing that banks need to do. Some of them were engaging in non-core businesses, took customers' ZIG deposits, converted them into forex, and then converted them into properties. Now the customers want their ZIG. They don't have the ZIG at the central bank, and they are saying, central bank, please print money. No, we are not going to print money. You have to unwind those positions and give back the customers their ZIG to traditional banking as it used to be. So, having said that, here are the measures that we want to implement with the immediate effect. First of all, review of exporters' foreign currency retention threshold. In order to guarantee continued stability in the interbank foreign exchange market, through augmenting the supply of foreign currency as well as building the critical foreign currency reserves needed to anchor ZIG, the foreign currency retention level for exporters has been reduced from 75% to 70% with immediate effect. This implies that the effective surrender portion of export proceeds has been increased from 25% to 30%. In other words, the surrender is now 30%. This is part of our de-dollarization roadmap. As we get towards 2030, we will be continuously reviewing the retention and surrender such that by the time we get to 2030, we will be like any other country in the world where retention is zero. You get to export proceeds and you immediately convert them into local currency, and local currency becomes the sole transacting currency. So we have moved by 5 percentage points, and what you see when you analyze the numbers is that currently the level of trading is that we are almost 30% ZIG and 70% USD. So we are moving in tandem with that. Now, introduction of a US dollar denominated deposit facility, USDDF. Exporters with no immediate use of the ZIG equivalent of the additional 5% export proceeds surrender requirement will have an option to invest it in a USDDF at the Reserve Bank, which they can withdraw in ZIG on demand at the prevailing interbank exchange rate on the settlement date. In our consultations with the market, exporters were saying, we surrender, let's say, $1 million US in April 2024 at an exchange rate of 13. So they would get 13 million ZIG. In September, the rate moves to 26. And therefore, their million should have now been worth 26 million ZIG, but it's still 13 million ZIG that we gave them because they haven't used it as yet. So we are saying, let us, the Reserve Bank, take on the exchange risk, because it is our role to maintain exchange rate stability. So whenever you want your ZIG, if you surrendered $1 at 26 and now the rate is 27, who give you 27 on the date that you want it. So we have taken away the exchange risk from the exporter. But it's only for the 5%. Why for the 5% only? Because of the 30%, 12.5% goes to government, and they immediately pay for that in ZIG. The other 12.5%, we don't even touch it at the central bank. As soon as we receive it, we sell it back in the market This is the intervention that we did yesterday with 10 million. It came from the 12.5%. So the zig for that 12.5% is coming from the market. So it's only the other 5% that we then have to fund as the central bank, and that is the one for which we are giving the option to hedge. Then number C, refinement of the foreign exchange management system. We had been receiving complaints from banks that the central bank has set a margin of 5% on our trading margins, and we are not being given the flexibility to price as we wish. So, in order to clarify that, we are saying the Reserve Bank is further refining and clarifying the interbank foreign exchange trading guidelines to authorized dealers as follows. The 5% trading margin as communicated in previous interbank foreign exchange trading guidelines issued at the inception of the willing buyer, willing seller exchange rate trading arrangements on 3 May 2024 was only applicable for the determination of the starting exchange rate following the introduction of the new currency, ZiG. Accordingly, authorized dealers are expected to on-sell foreign exchange purchased from willing sellers, including from the Reserve Bank, at a margin consistent with the international banking practice. Underline international banking practice. If we then see you adding a margin of 50%, we'll ask you, which international benchmark is this? Which country have you seen where the margin is 50% above? So we are just saying, let's be a normal country, let's do what all the countries are doing. Your dealers, your traders know the international trading margins, and those are the ones that we are going to apply. There is no prescription from the central bank as to what it is. Then removal of limits on foreign exchange trading. The limits on funds that can be accessed from the foreign exchange interbank market that had been set at 500,000 and 100,000 for primary and secondary users weekly per entity, as stated in section 3.1 of the Exchange Control Circular 4 of 2022, have been removed with immediate effect. The Reserve Bank will issue streamlined foreign exchange interbank market guidelines to operationalize the refinements on the exchange rate management system and removal of the foreign exchange trading limits. What we are saying is that if you are an importer and you have your invoice and it's for 2 million US, you go to your bank and you apply for 2 million US and they will sell it to you at the willing seller, willing buyer rate. There is no restriction to say it can only be 500,000 a week. That restriction has been removed. Number 3, review of prepaid international debit and credit card limits. In order to promote the use of the prepaid international debit card and credit cards, the Reserve Bank has, with immediate effect, reviewed upwards the annual limit from 500,000 US dollars to 1 million United States dollars. This review will also enhance the ease of doing business and reduce the use of foreign currency cash for cross-border transactions. What we are saying is, if you are going to buy, you are a cross-border trader, you are going to buy anything from South Africa or wherever, don't carry cash. Load it onto your card, and you can load it up to 1 million US dollars if you have it, and it will be safe that way. We have seen cases where buses have been waylaid by robbers en route to South Africa, and all the people in the bus have been told to surrender all the cash that they've got. If you've got a card, you just surrender the card and give them a wrong PIN number, and your money is safe. That is what we are saying. We are also saying it's not necessary for you to keep your 1 million in a safe deposit box when it can be in a card that is under your control, and it's money that you can use wherever you are in the world. So that is an opportunity for you to take that money from the vault, put it in a bank, and it's at your disposal. You don't have to go to the bank to apply for it. You just use your card as and when you want to use it. Number 4, foreign currency exposure limits. This is some of you may not understand this, but I think the bankers are the ones who have been raising this, and I think we just want to make it clear that we want to reduce the bank's exposure to foreign currency as we head towards 2030. So the single currency and overall foreign exchange risk exposure limits are critical risk management tools for managing foreign exchange exposures of banks. These limits are prescribed under the Banking Regulations Statutory Instrument 205 of 2000 at 10% and 20% of net capital base, respectively. However, as provided under the banking regulations, the Reserve Bank has been granting temporary exceptions on a case-by-case basis given the multi-currency framework and its impact on the banking institution's balance sheets. In order to allow ZIG to gain prominence in the multi-currency system and to align with the prescribed foreign currency exposure limits under the banking regulations, the Reserve Bank will set upper limits to facilitate winding down by banking institutions that are currently overexposed. We have seen banks that are exposed to the extent of almost 90%. In other words, you have dollarized your entire balance sheet. And we are saying, by just doing that, it means you have taken customer ZIG and converted that ZIG into US dollars. But you have not told your customer that that is what you have done. The Forex is yours. And then you start running around looking for ZIG when the customer wants their ZIG. That has to be unwound. So we will be focusing on those whose exposures are high and reducing limits as we get to year 2030. Then sustainable accumulation of gold and foreign currency reserves. This is a statement of intent from the central bank. Since the introduction of ZIG in April 2024, the Reserve Bank embarked on a reserve accumulation strategy focused on ensuring that the ZIG component of reserve money is fully backed at all times. The total holdings of gold and foreign currency reserves have increased by about 90% from $285 million in April 2024 to around $550 million or 14 billion ZIG as at the end of January 2025, thereby providing more than 3 times cover for the reserve money of ZIG 3.5 billion. Consistent with its monetary policy objectives of ensuring currency and exchange rate stability, the Reserve Bank is committed to the continued accumulation of reserves to cover ZIG reserve money in the economy. The Reserve Bank will leverage its foreign reserves build-up strategy on the anticipated increase in gold production from 36 tons in 2024 to a projected 40 tons in 2025. As you know, we are receiving royalties from gold producers, so as and when gold production increases, we will also be increasing our reserves. Interest rates. Starting with the bank policy rate. The bank policy rate, which is currently at 35% per annum, is assessed to be appropriate to support the current tight liquidity, quite tight monetary policy stance and the envisaged economic growth. The policy rate will be maintained at the current 35% per annum and reviewed by the Monetary Policy Committee from time to time based on inflation developments and other market fundamentals. As you know, currently we don't have ZIG year-on-year inflation. We'll start having ZIG year-on-year inflation from May this year. And then that's when we will then see whether we are in positive interest rates or negative interest rates. So for now, we are maintaining it at 35% per annum, although there are some who are saying their estimate is that the openings ZIG inflation rate is going to be about maybe 70%. and therefore rates should be higher than that, but we've said, let's wait for the number, and then we'll review the rate as we get there. Minimum deposit rates and promotion of a savings culture. In our consultations, especially with the Consumer Council of Zimbabwe, we were being told that people are not banking money because banks are not paying interest. We were also being told that banks don't even offer you the opportunity to open a savings or a time deposit. They just say, put your money in a current account. And we are saying no. Why are we shortchanging depositors? And maybe this is why people are opting to bank their money elsewhere. So, as a central bank, we have therefore seen it fit to review the minimum deposit interest rates that banks should pay. That is the minimum. You can pay more than that. In fact, I know there are some banks which are paying more than that. So for ZIG savings deposits, we were previously at 3.5%. We are now at 5% per annum, mandatory. So if you open a savings account in a bank, you should expect that bank to pay you at least 5% per annum. And if it's US dollar savings, we were at 1%, you must now pay 2.5% mandatory. For time deposits, ZIG, we were at 5%, now we are at 7.5%. And for US dollars, we were at 2.5%, now we are at 4% minimum. And please, if any of you here are not bankers but are customers, if you have money that you have no immediate use for, insist from your bank that you want it put in a savings account or in a time deposit. Statutory reserves. These have been maintained at 30% for demand deposits and 15% for savings and fixed deposits in both foreign and local currency. We are not moving on that one. Very sorry, dear bankers. Then the targeted finance facility and access to the willing buyer, willing seller foreign exchange market. We had received complaints from people who access the targeted finance facility that they are not being allowed to use that ZIG to buy Forex. And we are saying you can now use the proceeds from the targeted facility to buy Forex if you have a legitimate, bona fide foreign exchange invoice to import raw materials or whatever. Also, in order to address working capital challenges recently experienced by some wholesalers and retailers, the TFF has been extended to these critical sectors of the economy to enable them to restock. Previously, we had said TFF was only for the productive sector, but we have heard the pleas and we are saying those struggling retailers can also access the TFF, even though we know that their problems have got nothing to do with the environment. We know it. These are management issues, and even if they access that TFF and continue with those management practices, they will fold. This is a competitive environment. We have seen some retail shops fully stocked, selling in both ZIG and US dollars at rates that are almost the willing seller, willing buyer rate. They are still surviving. So why is it that some retailers are having challenges? Instead of pointing the finger at others, first of all, take note that 4 fingers are pointing at you. So we urge those retailers to review their internal systems, their structures, expenses, and even undo certain strategic decisions that they made that would have placed them in the problems that they are facing. Currency management. Again, in our interactions with the public, people told us that, number one, the ZIG notes are not readily available, and number two, where they are available, they get torn very easily. And so we have embarked on a project to bring notes that are of world-class standard. Now that ZIG has stabilized, we think that it's time that we have a currency that looks like any other currency. And we will be introducing these new notes in due course, but not later than the third quarter of this year. Then there is the issue of functional currency versus presentation currency. Zimbabweans are fond of wanting to confuse issues. Functional currency is the currency in which you are doing your day-to-day business. In this market, we are multi-currency. It can be predominantly US, it can be predominantly ZIG. But when it comes to your financial reports, the currency of this country is ZIG, and you shall present your audited results in ZIG. And we have had conversations with the PAB, we are fully agreed on that. If you are in South Africa, even if you are a company, like let's say a mining company that is exporting all their products in US dollars, when it comes to reporting, you report in rands. There is no difference. But we're hearing some of you, especially bankers, saying no, they want to present their results in US dollars. Why? This is a sovereign nation whose currency is ZIG, and you shall present your financial statements in ZIG. On liquidity, I think I have already spoken about it. We don't have a liquidity challenge, but however, as the central bank, we will continue to get liquidity from those banks that are long and don't want to lend, and we'll take that in the form of NNCDs and give them zero interest, and lend it to those banks that want to lend through the TFF. And that's how we are going to make sure that the available liquidity in the economy is circulating. Then number K, promoting interbank market trading. The Reserve Bank is concerned that trading on the interbank market has remained low, largely due to the evident market segmentation. Lack of trading on the interbank market necessitates the Reserve Bank to accommodate individual banks in short positions as opposed to settling the net market position through our role as lender of last resort. In this regard, and following extensive consultations with the market, the Reserve Bank is urging banks to put in place counterparty limits so that we are able to trade with each other. Counterparty limits for local currency, counterparty limits for forex. At this time, we are urging you, but sooner or later we may have to then say we demand that we have counterparty limits. But for now, we are saying, can you please make sure that we trade with each other? The market can only be efficient if banks are trading with each other. It is not the role of the central bank to redistribute available liquidity. It is the role of banks to trade amongst themselves. Bank and transaction charges. Again, when we consulted stakeholders, they said bank charges are too high, including what are called PSPs, payment service system providers. So what we have done, starting with ourselves, ZimSwitch, any transaction below $5 or ZIG equivalent is as good as cash. There should be no charges. If I swipe for bread which costs $1, I want my account to be debited with $1, not $1.05. So we are going to be monitoring that to make sure that banks strictly adhere to it. transactions below $5 are as good as cash. Whether it is on One Money, Eco Cash, Swipe, it should be free of charge. The same applies to the measure that we implemented in April. No bank charges for balances below $100 or ZIG equivalent. No service charges. If I leave $100 in my bank account and go away for 5 years, I want to come back, and the minimum I expect to find in that account is $100, not minus. Otherwise, I should actually find $110 if I put it in a savings account because of the interest rates that we've just announced. Then, promoting digital payments and use of point-of-sale machines. I think this was announced by the minister last week, and we are just reinforcing it. And we are saying, in line with the policy stance to enhance digital transactions in the economy, banks and payment system providers are directed with immediate effect to ensure that every business account, new and existing, is issued with a point-of-sale machine or any other approved digital mechanism which can facilitate transactions in both ZIG and US dollars. Any dormant POS machines or digital transactional gadgets should be reported to the Reserve Bank toll-free line, and we will deal with it accordingly. Banks have got mechanisms of seeing any POS machine which is not transacting, and would then want to find out why that ZIG point-of-sale machine is not transacting when you are supposed to be in business. Also, to promote the use of normal banking channels on all domestic trading transactions, the Reserve Bank further advises all local authorities and other licensing entities to ensure that all applicants for trading licenses, whether individual or corporate, have a bank account and a functional POS machine at the point of licensing or renewal. If you don't have a bank account and you don't have a POS machine, your license will not be renewed. Whether you are a trader, a bottle store, whatever, it will not be renewed. And we are going to enforce that through the licensing authority. Then let me come to the issue of discriminatory pricing practices in telecommunications. Again, in our consultations with the market, we were told that when it comes to buying data bundles, you don't get a price in ZIG, you get a price in US dollars. Or if you are trying to buy airtime through the banking channels, you try to buy in ZIG, you get an error message. You try and buy in US dollars, instant, it's bought. We engaged the mobile network operators, and they all committed that they are going to make sure that that is addressed, and they did that in writing. But we are just reinforcing this message in this monetary policy statement to say, if we catch you doing that, the fines are going to be hefty. So they better be warned. Then on the issue of capital flows management, in the past we used to talk of exchange control. We are no longer talking of exchange control now. We are talking of capital flows management, where we want to make it easier for the movement of funds in and out. And we have restructured ourselves accordingly. Then on other measures, there are measures that we have put in here on a sustainable banking practice. Every bank is supposed to make sure that they have a board sustainability champion on your board, someone who understands sustainability issues. The same applies to issues to do with risk management, cyber resilience, and artificial intelligence. So we are going to be ensuring that where necessary, some audits are done, and you give us the results of those audits. The details are in the detailed monetary policy statement. Then on microfinance institutions, again, we received complaints of predatory lending, where you get institutions that are charging 10% per month. That's 120% per annum. And you expect that person to pay you back? Again, Banking Supervision Division is going to be making sure that we look at all your loans, at what rate are they priced, and you reduce the pricing accordingly. Then promoting financial inclusion in remote and underserved communities. We would want to see bureau de change businesses in growth points, and as a gesture to ensure that this is done, the central bank is not going to be charging any license fees for branches that are opened in growth points. Then members of the public are also advised that only registered banking and deposit-taking microfinance institutions take deposits. We have seen cases of credit-only microfinance institutions taking deposits, and we have given you in the detailed document our website where you can see those microfinance institutions that are authorized to take deposits. Any other is not allowed to, and if we see on their accounts any evidence of deposits having been taken, that license will be withdrawn. Then abuse of self-deposit boxes to bypass formal banking channels. The Reserve Bank has noted with concern the increasing abuse of self-deposit boxes and the proliferation of shadow banks. It has been observed that some businesses are not banking all or most of their cash receipts and are instead keeping such cash in self-deposit boxes held with financial institutions or security companies. The Reserve Bank is working with FIU, and we are going to be monitoring to see what is your turnover, how much of it was cash, and where was it banked. Because we cannot have a proliferation of banks that are not regulated, where self-deposit boxes have become banks. That cannot be allowed in a normal economy. So the FIU will be after you, especially those manufacturers who sell their products on the informal market for cash. We want to see that money being banked, because in terms of the Bank Use Promotion and Suppression of Money Laundering Act, you are supposed to bank all your takings. So, ladies and gentlemen, those are the monetary policy measures that are going to be effective with effect from today, and we will hope they will assist in ensuring that we maintain the current stability that is prevailing in the economy. Thank you.
So I think.
Sorry,
inflation outlook. You did not read through.
or inflation outlook?
Yes, sir.
Okay. Through prudent reserve management and strategic interventions in the foreign exchange market, will stabilize the exchange rate, which is a key driver of price dynamics in a multi-currency environment. Inflation is expected to continue on a downward trend, with a month-on-month inflation projected to average 3% in 2025. So month-on-month, we expect an average of 3%, consistent with the exchange rate stability. Given the base effects caused by the spike in monthly inflation in October 2024, annual inflation is expected to be elevated from April 2025 to September 2025. This is why I was talking of the 70%, before significantly moderating to the at the year end to between 20 and 30%. So we expect to end the year on year, 20 to 30%. Month on month, we don't expect it to go beyond 3%.
The first one is on the level of ZIG. Reserve money is equivalent to 128 million. Are you comfortable with that level of ZIG, given that you have got a 3 times cover on that? Second question, what was the rationale of reducing the retention ratio, given that you say that you have got no challenges in meeting forex payments? Thank you.
The reserve money is a function of what we call the optimum liquidity level. By optimum liquidity level, we are saying we look at all the transactions that are taking place, and then we average them out to say, on a daily basis, how much is the economy or the market transacting? So that is the level of money which should be in the banks so that they are able to clear all transactions without fail. Currently, the OLL has been about 500 million ZiG, but we have never exceeded it when you look at the daily payments. It oscillates around 400 million ZiG. So at that level, it means we are still comfortable with reserve money of around 4 billion ZiG. But however, as we increase the amount of ZiG in circulation, we are going to be reviewing the OL, and therefore we will allow reserve money to increase. We're not saying it's going to remain stagnant at below 4 billion ZiG. Then the rationale for the retentions is that, as I said, at 75.25, the level of ZiG USD transaction in the market was 75.25. As we go forward, we are expecting to move to 70.30, and that's the way it should be. And again, if we get to 60.40, you can also expect that we will be adjusting retention and surrender accordingly as we go towards 2030. We don't want 2030 to be an event. We want 2030 to be a process. You should not feel it when you get to 2030. So you might find that maybe in the next 3 years we'll be at 50-50. And maybe in the next 4 years we'll be at now 60-40 in favor of ZiG. And therefore retention will also now be 40%. So that's how we arrived at it.
My name is Epi. Just wanted to find out from you, you did say that the exchange rate should be fair value 22, so why aren't you fully floating it so that it probably reaches those levels that you think it should be? And then secondly, I know you talked about trying to get POS machines. Do you think that's enough to actually capture the money that's in the informal market? I think personally that it's a lot of tinkling and fiddling. It will not fully capture that market into the banking sector. Thank you.
Yes, you know, when you look at total deposits versus the reserves that we have, and you just do simple arithmetic, the exchange rate should be 22 for sure. But there has been this misconception that in the willing seller, willing buyer exchange rate, there is a reserve bank hand that is controlling it. If we were controlling the rate, it would be 22. We want it to be 22. But there is this willing seller, willing buyer market, which for some reason is saying the rate should be 26. And then there is the other market, which is saying for some reason the rate should be 33. Those are market forces. We have committed to a willing seller, willing buyer arrangement. But I'm hoping that if you are the holder of ZiG, and you know that the central bank is holding reserves that can buy back this ZiG at 22, why are you willing to sell it to someone at an exchange rate of 26? So you are going to see market forces at play. People are going to say, no, I want the correct rate for my ZiG. And that's how the rate will go down to where it should be. On our part, we will continue to increase reserves, and maybe the rate was at 26 because people were doubting that we do have those reserves. I've just read you an audit report which says that the reserves are there. So certainly for my ZiG, I will not part with my ZiG for anything other than what I think is the fair value of that ZiG. Then on POS machines, what we said was, first of all, to the banks, if someone opens a business account, it means they are going to trade. they must have a POS machine. And then we said, if that POS machine is not active, because real-time banks can tell when a POS machine is not active, then we need to deal with that person to say, what kind of business are you in where there are no transactions and yet you purport to be in business? But is that going to stop the informal market? Well, I don't think so, because these people have got their ways of doing things, but we are trying to minimize what they can do, because we are worried and concerned at the level of informality in this market.
Hello. Yeah, good afternoon. My name is Paul from Zen Papers. Governor, I don't know whether it's a question or it's a comment. When you speak about the situation in the banking sector in terms of some banks being on long positions and others being on short positions, you speak as though you don't quite understand the reasons behind why banks behave like that, which I think could be a problem in terms of what you're trying to achieve. As you said, that when banks that have long positions don't lend to those that have short positions, that would actually stand in the way of your goal of making sure that you've got efficiency in the banking sector. And you also speak as though you are limited in your capacity to intervene to make sure that banks can be able to trade and cover each other's positions. What has been that you've done to understand the reasons behind why banks don't do that? Because once, for as long as those issues are not addressed, we will continue to have that situation where banks that have got access do not actually lend to those that are in short positions. Thank you.
Once upon a time, I can speak. Banks have different risk appetites. They may not want to trade with the other, and there are also issues to do with the correspondent banking relationships, KYC issues, and so forth. But we are saying those issues are no longer issues as we speak right now. You should be able, with security, to lend to the bank next door. And you should be able to look at their activity and calibrate a limit for that bank. So, but Golden, I think you need to ask the bankers, they are here, instead of asking me, because now I'm a central banker, so I could be speaking out of line. But having realized that, as the central bank, we have said, okay, if they don't want to lend to each other, we will take money from the bank that is long, but we will give them zero interest. So that we jolt them into thinking that, why am I letting this money go at zero? Then we will lend it to the bank that is short at the policy rate. So the interest that is coming to the central bank is interest that should have gone to a bank which didn't want to lend to that bank. So hopefully when they realize that they are losing money, they might decide to set limits for the bank next door.
When you came into office, Governor, one of your major points that you said in this room was to say that you wanted to increase confidence in the local currency. Do you think that you've done enough to improve confidence in our local currency? You say that it's 30, 70 now. Is that what is really obtaining on the market? I don't think so. Do you think that you've done enough, sir?
You don't believe that it's 37 because we look at transactions. When you look at ZIG transactions versus US dollar transactions, it is true. 30% plus or minus of the transactions are being done in ZIG and 70% are being done in USD. Take note that ZIG is a very new currency. It's not even a year old. It will be a year old in 2 months' time. So it's a 30-70. What is it that we have done to increase confidence? We started last year, we started ZIG with 285 million US dollars worth of reserves backing the currency. Now we have $500 million US dollars backing the currency. We have proved to you that the reserves are there. I just read an audit opinion on those reserves. Now, hopefully, armed with that information, you should now also say, no, maybe this currency, I should believe in it. Secondly, we have witnessed prolonged ZiG stability. I know some of you are betting against ZiG. And some of you are saying, it's done 4 months, there is no way. Well, believe you me, it's going to do 6, it's going to do 9, it's going to do 12 months, it's going to do 2 years. You seeing this stability. Because we have committed as the central bank that we will not print any money that is not backed by reserves. So whatever money is out there, it's money that we should be able to buy back using the reserves that we've got. So that we think should be able to instill confidence in the people. But as I have said previously, we cannot legislate confidence, but we will earn it because of what we are doing. No, it doesn't, because what we do is we look at transactions that have been processed in US dollars and transactions that have been processed in ZiG. And then we say, what is the ratio? Yes, we know that there is a cash market out there, but yeah, to your point, we are only concentrating on those transactions that go through the formal system.
Some concerns on the market in terms of the widespread adoption and use of the ZiG in certain quarters of the country, to mention Bulawayo, as well as in the marginalized areas of the country. And perhaps within the same bracket, how are you striking a balance between the liquidity stance that you've taken vis-a-vis the need to have the local currency widely adopted? Thank you.
Cash, bank notes.
Affirmative.
Yeah. So we, as regards the marginalized areas, the rural areas, yes, we acknowledge that we need to do some work to make sure that ZiG spreads to those areas. It's not that they don't want it, but it's because it has not reached them. You know, for you to get ZiG, you have to be involved in some economic activity. So you find that if you go to the cotton producing areas, there is ZiG there, because the cotton marketing companies came to us and said they now want to pay the cotton farmers. But take note, last year was a drought year. Most of the people, you know, my brother here, we went to his rural home in Chile, no grass, it was all dry. So these people did not harvest anything, so they don't have anything to sell, so they can't get ZiG. But having said that, we now want to make sure that as we go into this year, fortunately it's a good season, we are going to be educating them that there is ZiG, the currency, cash, and making sure that that cash is available in those rural areas. In Bulawayo, electronic transactions are happening. Cash, yes, when we were talking to the combi operators, we heard that they mostly prefer to use rand and puller there. I think there is work that needs to be done for us to conscientize them to the fact that, you know, you need ZiG for your day-to-day transactions. And we are also going to be, by the way, you didn't ask this question, but I might as well tell you, we're going to be introducing higher denomination ZiG notes so that we ensure that you know, the ZiG note that you can get can buy something meaningful. Because right now, the highest denomination is 20 ZiG. At best, it buys you half a loaf of bread. So we need to make sure that we introduce higher denominations.
Speaking, you noted that the retailer sector is mainly affected by mismanagement of their structures in their business. However, international companies like Powerhouse, Coppers, Deloitte, Unilever, Travis have left the country, mentioning that the exchange rate challenges the currency issues. Would you say that people have trust in the ZiG, right? And is it the best way forward?
When you look at those companies that have left, PwC, the accounting companies and so forth, in the first place, these are companies that would be pricing mostly in US dollars anyway. So where is the current crisis? Sometimes when people exit, they want to find a politically correct term to use to say I'm exiting. Some of these companies regard Zimbabwe as a sanctioned country, whether you like it or not. Because when you have a country where, for example, the head of state is on sanctions, people who also think that the whole country is on sanctions. We have had cases where, even us here, when we try to buy certain things from outside the country, you get the answer coming back to say, no, we can't sell this to you because you're on sanctions. So these are called narrative sanctions. And so this is why when people talk that the sanctions have not been fully removed, people say, no, it's not true. I can tell you it is true. And the banks here will tell you. Some of them are struggling right now to get correspondent banking relationships. They are saying, but you are saying sanctions have been removed. So, American bank, please, can I be allowed to clear dollars with you? The answer is no. And they give flimsy reasons. But the reason behind that is that they are saying, if there are some people who are on sanctions in your country, there's no way we can deal with you. And it's real. But you can't tell me that Deloitte left Zimbabwe because of currency crisis. What percentage of their billing was in ZiG? You are the ones who are audited. You are the ones who pay them. If you ever received a ZiG invoice from an accounting firm, even us here, our auditors, they give us a US dollar invoice and we have to struggle to say, but I'm central bank, I can't pay you in this. They say, if you don't want, I'm not going to audit you. That is what it is.
Governor, thank you very much for the presentation. I think we have gone through a lot of material here that we are going to chew over, but also to implement, because once Governor has spoken, that's it. From a monetary policy perspective, I think you would agree with me that most of the issues that were raised or that are being raised have been captured here. Of course, it will never be 110%, but at least there is a fair amount of work that has gone into this. I said this is a culmination of a long, exhaustive and exhausting process, but I am glad that the questions that we have received this afternoon border around the details that can be worked. Let me end by saying that there is no going back on our own currency. All economic agents in this country need to understand that. If we are going to progress, we need to put our shoulders onto the yoke and get it moving. We cannot develop using another country's currency. That is something that we need to understand and we need to internalize. There is no going back on the targets set by His Excellency for 2030. Governor has said, we do not want 2030 to be an event. He means it. It has to be a process. And we don't want to feel it when we get there. There won't be administrative measures for that to happen. It should happen through the market and through that process. Let me thank again our board members, especially Mr. Manikai. Thank you for being here, leading your team. Our MPC members, thank you very much for coming. the other leaders of the associations and the banks in this country, our press, members of the press, thank you very much for coming. Please, if anything is unclear, the Reserve Bank lines are open to explain anything that you may not understand. The data is there in the monetary policy statement. If anything is missing, please come back to the Reserve Bank and say there is data here that is not reflective of what was said. But thank you very much and good afternoon.